all about the currency, the current account, and all kinds of deficits, better than most people, not just by the virtue of being the former banking secretary, but of course being former RBI governor. He battled the Asian crisis with aplomb, and joining us on the show is Dr. Bimal Jalan. Dr. Jalan, thank you very, very much for being with us. A slew of measures that have been announced, and we are calling it rebooting the rupee and managing the macros. What do you make of these measures? Do these measures send out a signal that the government is proactive, is in command, or are we actually sending out mixed signals of panic here as well? Sir, is this the government sending out the message that they are very much in command, taking proactive measures, or are we actually sending out mixed signals of panic as well? Dr. Jalan, can you hear me?
Yeah, just about. Yes, please go ahead.
Okay, can you louden my audio to Dr. Jalan, please? Dr. Jalan, I'm really asking that the measures that have been announced to contain the rupee and to contain the current account deficit, do you believe these are signs of a government in command and, you know, these are signs of proactive measures, or are there some panic signals that we are sending along with it?
No, I don't think there are any panic signals, but let us wait and see how it works out. Because most of the measures announced, those five very important measures in terms of capital flows inside India, I mean, let us hope it works. And if they do work in terms of FDI and other investment that we are thinking about, as well as the government, as well as the Indian investors investing abroad in rupees and getting masala bonds and so on. So let us just wait and see how it works out and what the expectations around the world are. At the moment, there is a certain amount of turbulence all across the global economy, including US. You have seen Brexit, for example, which is not yet settled. Then, of course, European Union also. So let us hope it works out. So I'm just saying that just wait and watch, okay?
Yes, we must wait and watch. But the DA secretary was here with us on ET Now. The date was announced, Mr. Subhash Chandra Garg, and he said that the government expects about $8 to $10 billion inflows on account of these measures. My question really is, why are we making measures to attract $8 to $10 billion when you have a forex reserve of $400 billion? Aren't we sending out a signal that the government is in panic mode?
No, we are not sending out a signal that the government is in a panic mode, but the government is certainly sending out a signal that we will manage it. In the sense that, so far as, say, if the rupee is depreciating and if the RBI is releasing foreign exchange from its reserves, which are quite high and very high in fact, and then there will be a panic in the sense that we will be spending 10 billion, 20 billion, 30 billion, one doesn't know. So the government is trying to support the work being done by the RBI to reduce the range of what you might call depreciating rupee within a very short term. So hopefully these would work. I mean, I have not seen the Sensex now, but hopefully that some of these measures would give confidence that we will have enough foreign exchange reserves to tackle any uncertainty regarding what the future is in terms of the global economy.
But Dr. Jalan, this fall in rupee is largely on account of global factors. What is happening to the lira, what's happening around the world, and a strengthening dollar. Our rupee is right now at 72.53 as we talk. Do you believe and my own sense is that the assumption within the government was that this is the range where the rupee will be in, 72, 72 and a half. Is that the level that you see for the rupee? And how do you believe the global factors will be weathered by the measures that we have taken? Because global factors are all extremely against emerging market currencies at this moment.
No, so the second part, so far as the global reaction to what they have done, I mean, they are also waiting to see how the dollar develops, and dollar is strengthening and so on. If dollar is strengthening, then obviously there would be a case for them to wait and see how strong it becomes and how the rupee depreciates. If somebody wants to invest in bonds and so on, they would like to make sure that they get more rupees for the investment in dollars than they do now. So they may wait and watch. What I am saying essentially is that it is too early to forecast what exactly will happen. I mean, I am just hoping that much of it will work. And if the rupee starts appreciating, you will see that if the appreciation over this next week or so is positive, then the measures that we have announced will bring more capital into our country. Of that there is no doubt. So I think just let us wait and watch for the time being.
No, absolutely. But Dr. Jalan, I think the follow-up question has to be some of the things that the government has taken to incentivize short-term capital on the ECB front, reducing the tenor from 3 to 1 year. There is no dearth of short-term capital in India. Is this a measure more aimed at short-term? Because people are divided on what the impact of tweaking in ECB norms will be over the medium and the long term, really.
No, that part is correct. In the sense that the short-term external borrowing at the moment, you might regard it as something which is relatively short-term in terms of policy also. That if they are using a short-term money or short-term borrowings in the ECB, external commercial borrowings, etc., then obviously this is not something which is good for our country from the long-run point of view. Because then if there is uncertainty, say 2 years, supposing it goes on for 6 months or 7 months, then the FPIs, the foreign portfolio investors have been withdrawing money from India, then there may be a big sort of action from the foreign investors also to sell their capital. So we have to wait and watch, and we have to make sure that if there is any uncertainty around the world, then the short-term borrowings are avoided. That was the general policy format in India, that we were always keeping our capital flows under control. That is, capital flows from abroad under control, even in the worst balance of payments crisis. So what I'm trying to say is that we have to make sure that the capital or the debt that we owe to the rest of the world in dollars over the short run doesn't exceed the limit that we can meet in terms of our own foreign exchange resources over a period of time. Does it make sense to you,
no,
Supriya?
That's a very interesting and a very remarkable point that you're making, because the FPI outflow from India in the only 10-15 days of September has been about $1.3 billion. But where do you believe the ring fencing needs to happen? What sort of measures that the government needs to put in place along with the ECB tweaking, so that we don't risk flight of capital and risk our balance of payment situation?
No, that's absolutely important, and therefore the 5 measures which have been announced, for example, just now, and if supposing capital flows into India in large quantities before these measures, and that our rupee appreciates a bit, then we have to reverse these measures over a period of time, not retrospectively but prospectively. You see what I mean? That is, this is not a retrospective action, must not be taken on any financial matter. So I am hopeful that we will.
Dr. Jalan, a quick question on masala bonds before I move to the imports
and very.
Yes. Oh, Dr. Jalan, on the masala bonds front, obviously the idea is to incentivize masala bonds, but will investments happen because of these incentives? Because investments are an act of faith. They will only happen once there is a demand-supply scenario that's sorted out. Yes, there is some amount of capacity utilization that has gone up, but are we sitting at the cusp of big investments breaking ground? Will this act as an incentive at all? Are we still some quarters away from investment taking off, private capital?
No, but dollar is strengthening. You see exactly what is happening. Dollar is strengthening. And if you allow the short-term borrowing of the kind which has been announced for a relatively short term from our point of view, then I would see that the demand for short-term borrowing abroad, that will go up, because dollar is strengthening, and you will get more rupees for what you have invested abroad in terms of 1-year deposits. Do you see what I mean? I mean, this is all, all of this is, I mean, we have to take some time and see how it works. And if there is confidence in India's economy, say, if the rupee is appreciating, you will find that things settle down.
Dr. Jalan, I think the big concern is a ballooning trade deficit in India. $80.4 billion is what Indian trade deficit was for the last recorded data. My question really is that the government has made its intentions very clear, that they will have curb on imports going forward. But is that a measure that will serve us any good purpose at all? Because there are FTAs and imports can be routed through those countries. Isn't a import, imposing a minimum import price or a safeguard duty on some goods perhaps a more elegant way of handling this situation?
I mean, I think that you are right. I mean, that we don't want to get back to protectionism of the kind that we had in the 70s and, a long time ago. We don't want to get into that kind of protectionism. We are a part of the global economy, and that we have to keep our economy open, liberalized, and so on. But the US has also taken some measures, as we have seen, to try and restrict imports. So at the moment, the whole global economy, the global process is undergoing certain, what you might say, undesirable changes, and let us hope that it will work out. That we will see stabilization of the US policy. At the moment also, they're talking about increasing import rates from imports of China or other imports from other countries. So I think that the situation is not what you might say extremely satisfactory so far as the global system is concerned just now, and mainly because of the action being taken by the US, the largest economy in the world, the most important provider of what you might say foreign currency. And so, I mean, we are passing through a phase which happens once in after several decades, and let us do our best to make sure that we have enough resources, we have enough foreign exchange, and that we have enough changes in our policies which would bring about confidence in investing dollars in India.
But Dr. Jalan, is this not sending out a confused trade policy signal as well? I mean, at one front, you are telling America and you're preaching globalization to the rest of the world. You want to move WTA against some of the countries and what they're doing. But at the other level, you're also talking protectionist. You're talking we will put curbs on imports. Isn't this also a sign of, if I may dare to say, a confused trade policy? You can't be preaching globalization to the world and then doing exactly the opposite when it comes to your trade. Or is this the new reality of doing global trade?
No, Supriya, I would say, no, sorry to interrupt, but what I'm saying that so far as India is concerned, we are not a very major player in the global trade. And we have to respond to what the global circumstances is. You must take that into account, that if the global economy, there is protectionism increasing even in China or say US, and then we cannot, we cannot not respond to it. So we are responding to it, but let us hope that all this would settle down. Now, America has announced some more import duties, and therefore they would be restricting imports. Then China has responded. And so, I mean, it's a very confusing signal just now. I mean, it happens 30, 40 years every time something happens like this. And I hope things would settle down. US would take into account the fact that the global economy, the globalization, the free trade principle, that they were all worth moving on. And I hope this will happen over a period of time. WTO has a role to play, but they have also made this slightly less important. So, let us hope. I mean, we are going through a phase which is turbulent, and let us try and stabilize it and do our best to meet all the requirements which we need to tackle. Okay?
I think going through a phase that's turbulent is an understatement. But before I let you go, sir, I will have a quick word from you. And I know you don't want to talk ever on what policy action should be. But given the fate of the rupee right now and given our current account deficit levels, even though inflation is largely under control, now that these measures have been taken, what stance do you see for the policy in terms of where is the rate trajectory going to be? Is a rate hike a given? Is that perhaps a safety wall that the RBI will use at this point in time?
No, this is the most important thing just now. You know that in response to the measures which have been announced by the government, that the Reserve Bank should try and protect the rupee as far as possible and make sure that the confidence in the market, that we respond to the market behavior in a way so that it becomes successful. I mean, you remember we handled the Asian crisis in the Reserve Bank. I mean, how was it done? It was done by beating the market expectations that the rupee would not depreciate. But then when it depreciated to a point where we did not want it to do, then RBI intervened very strongly, although we didn't have too much balance of payments resources. But today we do. So we have the means to achieve our ends. So this is the point I want to emphasize, that you should watch the market and see that the expectations are not for a further depreciation in the rupee. And if this happens, then RBI should intervene strongly. That's all.
You're going to vote in favor of a rate hike at this point in time?
No, I don't vote. No, I don't vote on the interest rate. Okay.
Okay, the only vote that you will cast is your ballot. And thank you very much, Dr. Jalan, for joining us.